Hi everyone, this is Rob Roy and welcome to the Elliott Wave Elite US Market Update. Taking a look at the charts, we continued our pullback from the highs in the Wave 3. Again, as we've talked about over and over again, we have this Wave 4 target down here, which again doesn't say that we are in the Wave 4, but if we are, that's where we're going to go. We still have this uptrend intact, kind of just old school technical analysis here where you connect the lows, and until we break that, I wouldn't put a whole lot of concern into whether this is the Wave 4 starting yet or not. However, a couple things to consider as we look at this. Over to the SPY, as we can bring volume into the mix, note that now we have had a little bit of an increase in volume. We still haven't gotten above average. Remember, the red line is the 200-day moving average. We still haven't taken that out, but on this move to the downside, there was a little more volume coming in, and we have to pay attention to that. Remember, price to volume action is something that you always consider, even with the power of Elliott Wave. So going back and taking a look at the chart of the SPX, that trend line still intact. We did have some big economic news here in the U.S. on Friday with the release of the jobs report. The highlights are the work week stayed steady at 34 and a half hours. The participation rate, though, is what I wanted to focus on. The numbers, the jobs numbers were really good. The total number beat. But the participation rate went down. It went down from 62.9 to 62.7, which means here in the U.S. we have 95 million out of 320 million able-bodied workers that are not employed. So we are about to get another above 4% print on the GDP. If you've followed me for any length of time, you know that 3% is the key. Anything above 3% shows that you have a healthy, growing economy. And with that, and with all these jobs that we're adding, why is the participation rate dropping? Well, this is where you start to get into the argument against too many government social programs. Once you give things, it's hard to take them back. There was a study done, it was called the Jane Survey, a while back, that showed that in the U.S., if a family of 4, 2 adults and 2 kids, took advantage of every single program that's available to them, they would have been making the same income as a household earning $75,000 a year. And they're earning that without working. So this whole guise of everybody wants to work is simply not true. Other things to be concerned of is some of the lower paying sectors added more jobs. Health, leisure, transportation, those were where the increase in jobs were. The one higher paying category was construction was up, but manufacturing, which is important, autos, retail, those were all to the downside. And so we want to watch and see how that plays out. Plus now we have all this stuff about us adding more tariffs to China. Is this a bluff? Is this just a posturing thing? Are we really going to go through with them? Not sure. But the big key was the fact that wages increased 2.9%, which is the highest increase since 2009. And what do we have? We have a Federal Reserve that's raising rates. So with the Federal Reserve raising rates at this point in time, and the wages going up, that's what everybody's been waiting for, to see signs of inflation. Now that'll shut down an economy pretty quick. When you have rising inflation and rising interest rates to offset that, you can get into stagflation or an all-out recession. So that'll be something to watch. We also have on the VIX here, with looking at volatility, you can see that so far at least the 12 level has held, and we've moved to the upside here, bouncing off that level, and we also have broken out of that descending triangle. All the technicals still apply, even on the VIX, as you would see on any other security. So we can use Elliott Wave as well. It's not showing a breakout into a strong trending pattern yet, just a wave C, but we'll see. If we break above this A, I wouldn't be surprised to see this Elliott Wave pattern relabel into an upward 5-wave pattern, but that's just a guess. We'll have to wait and see. The market will tell us. We also have the bulls in that Bulls versus Bears survey moving over 60% now. It was at 59.6, almost 60 last week. We went above that. We had a slight drop in the Bears from 18.3 to 18.1. So again, some things to be concerned of when we go back and we look at this S&P to see if this wave 3 has indeed run its course. Is this the start of the wave 4? Again, I would like to see for that to be the thesis, this upward trend line to break, but lots of things going on geopolitically. We hadn't gone through economic stuff in a while, so I kind of wanted to update you there. I don't think I necessarily need to show you the US dollar every week, but they are moving in concert, in step. Again, see, we had this upward move here on Friday. Looking at the Elliott Wave pattern, we are possibly bouncing without coming back down all the way to that previous wave 4. So maybe the wave 5 is not complete yet. We'll have to wait and see how that plays out. Interest rates up, and that's why I was saying that they are in concert. You would expect if interest rates are going up, the value of your currency would go up as well. This is in a wave C, so not too much of a discerning trend there yet. But we could see that come back and take out that wave 5, and then we would have potentially both of these making new wave 5 highs, and that would really be where they were moving in step. But they seem to be syncing up here relatively well. So things to keep an eye on. I guess I'm just saying that, you know, maybe time to wave the caution flag just a little bit on this big rally that we've had. Did want to show you, even though we've closed out these case studies, and I've closed them out for our subscribers, but when we take a look at this move here on Friday, you can see that the wave 3 is still very strong. Looking at the DMI for confirmation, we see that we have the ADX moving in a very strong direction to the upside. We also have the positive directional indicator well above the negative, very good separation there. So this is where you could have said, okay, all right, we met a fantastic trade here, but it doesn't look like this wave 3 is over with yet. Maybe we want to put on another trade, you know, trade with the house's money, if you will, and you could consider maybe coming up and putting another butterfly up in this wave 5 target area. A very low cost, low risk position. You know, don't want to give back the profits that we've already made, but you could take advantage of what the technicals are showing us, is that this still may not be complete, or you could just say, hey, I made a nice gain and I'm done with this, and we're moving on to other ones. Speaking of other ones, we had the CLR. Look at this. This is a perfect example of why we've gone through over and over again. Don't take one leg off. I actually had some emails from people saying, why aren't we taking off the puts? Well, this is exactly the reason why. Take a look. There was our triangle with that doji right in the point. As you remember, we had this upward breakout. When we looked at the DMI, look, it never really, the ADX never confirmed any strength in that move. Look, we had the divergence that we talked about. So the ADX was going down with this potential upward breakout, and that wasn't showing the strength of confidence that that move was going to continue, and lo and behold, it didn't. And it looks that now that the big break is to the downside, as we certainly have more volatility to the downside. We look at volume, and we actually got above average volume. That was the other thing, is as you can see on that upward move, there was no volume to it. So that's why you watch these things. Price to volume action, and you look at your confirming indicators along with Elliott Wave, and that's how you create very strong trading systems to where you can be a successful trader. The newest one that we added last week, MMS, obviously a pretty poor tape for the week. Again, reminding you that we pretty much went down every day. We take a look at that, and it held in there pretty well. So nothing to suggest that there's anything other than a potential continued wave 3, but obviously a very weak market could make that a little tougher, but it is in the strongest wave, in the wave 3, and it's within a pretty tight trend channel here as well. If you connect these lows and highs, and it hasn't violated that either, so at this point, no reason to consider doing anything as far as taking this one off yet. So we'll see if it turns around. It has a doji on Friday as well. You can see that we opened at 65.29, closed at 65.27. So maybe we're going to get some action out of this one on Monday that can give us a better idea. But that catches you up to date, and hope you've had a wonderful weekend. We'll be back to talk to you again next week. Take care, everybody.